Welcome to the first episode of Eye On Gillette, the first in what we hope will be a long series to educate and inform Gillette residents about the how, what, and why of city operations. Our first episode is a brief look at government accounting. We chose this topic as the city is in the middle of preparing the budget for the upcoming fiscal year, which begins on July 1st. This information was presented to the Gillette City Council on January 26th. Here is Finance Director Michelle Henderson with City of Gillette Finance 101.
So today we're going to look at what I've termed Finance 101, which is kind of an overview of governmental accounting, because governmental accounting does not work the same as private industry accounting or the way you balance your checkbook at home. It's completely different. And so just to make sure going into budget season that everybody is on the same page and understands how it works, we're going to kind of go through the different types of funds that the city has, and then we'll also look at a brief overview of their financial picture too. Governmental accounting is governed by the GASB, which is the Governmental Accounting Standards Board. So they write all of these different pronouncements that governments have to follow, and that's municipalities and counties and states and school districts, and anything that is a governmental entity has to follow these rules that are made by GASB. So the reason for that is just to determine that governments are held accountable for the funds that they are watching over. Governmental accounting has two different types of funds. There are actually 5 different fund types, but the City of Gillette only has 2 different types of funds. And the first one is governmental funds, and then the second one is proprietary funds. Governmental funds are funds that are typically used to account for tax-supported activities, like activities that you would expect a government to provide for their citizens. They are all related to serving the public. The two governmental funds that the City of Gillette has is the General Fund and the 1% Fund. The other type of funds that the City of Gillette uses are called proprietary funds, and these are funds that are generally used to account for business-like activities. And the activities that happen within these funds are generally supported by charges for services. So proprietary funds are supposed to function as standalone businesses. We have 2 different types of proprietary funds. The first type of proprietary fund is called an enterprise fund. And an enterprise fund is used to report an activity for which a fee is charged to external users for their goods and services. So this is all of the citizens that use those goods and services outside of this building. We have 5 different types of enterprise funds. We have the solid waste fund, the water fund, power fund, the sewer fund, and the fiber fund. The other type of proprietary funds that the city uses is called an internal service fund. That is a fund type that is used to report activities that provide goods and services to internal customers, so other funds or other departments within the City of Gillette. We have 3 different internal service funds. They are the Vehicle Maintenance Fund or the Fleet Fund, the Property and Liability Insurance Fund, and the Health Insurance Fund. So now we'll go through each fund one by one. The first thing we'll look at in each fund is how the revenues are generated within that fund. So in the general fund, we have lots of different types of revenues that come in, but some of them are fairly minor, and so we'll just talk about the major ones. So the main revenue sources in the general fund is first and foremost is the sales and use tax. So sales and use tax generates about 53% of the revenue within the general fund. So when there are fluctuations in sales tax, the general fund is so tied to it that we really have to understand how that affects our operations. We also have charges for services, and charges for services would be if an enterprise fund uses services provided by the general fund, the enterprise funds pay for those services. So that is another source of revenue into the general fund. We have royalties and severance tax. Those are funds that come through the state of Wyoming. That's about 8% of our revenues. We also have property tax. Everybody's familiar with property tax. That is a county-generated revenue. from their overall total mill levy. Any property that is within the boundaries of the City of Gillette is charged an additional 8 mills. Those 8 mills generate revenue just into the City of Gillette. That's about 7% of the general fund revenue. Each year it's right around $2 million. We get state supplemental, which is just a direct distribution from the state of Wyoming. They give money to the cities, towns, and counties throughout the state of Wyoming. This money is run by the state legislature on a biennium basis, and so they take $105 million and split it equally between 2 different years. So $62.5 million each of those 2 years is distributed to cities and counties through a very complicated formula that involves population and revenue base and that kind of thing. So we get about $1.2 million from that, so that's about 4% of our revenue. We also get auto tax. So when you go over to the county and you pay your license plate fees for your vehicles, some of that revenue comes back to the City of Gillette. We have licenses and permits, and so when you go and get a building permit or a liquor license, that money comes to the City of Gillette. That's about 3% of our revenue. We get some state and federal grants, and then gaming revenue, which is the lottery. If you buy lottery tickets or historic horse racing, some of that revenue comes to the City of Gillette. So those are the main revenue sources. Now we'll look at the different expenses that are in the general fund. So the general fund has all of the administrative overhead for the City of Gillette. So they have administration, finance, HR, IT, the city clerk. They also have a division that's called Special Projects. And so this division houses basically any expense that doesn't have a specific home. So it would be expenses that benefit the entire organization. So the city is responsible for debt service on the student housing. That payment comes out of the Special Projects division. We also contribute money to Camplex every year. That money comes out of Special Projects. And then any economic development contributions. Of course, we have police operations, so that's patrol and detectives and animal control and dispatch records. We have public works, so any park streets maintenance, and then all of the maintenance on city facilities. And then we have development services, so that would be building inspection, engineering, and GIS. Now I'll look at a brief snapshot of what the general fund's financial picture is as of the end of December. So the city's fiscal year runs July 1st through June 30th. So as of December 31st, we were 6 months through the fiscal year. We'll look at the same type of graph for every fund that we go through, and so they all work the same way. The first 3 columns are revenues, and the second 3 columns are expenses. So the first column is budgeted revenues for the entire fiscal year. And in the general fund, that is $31.7 million. The second column represents where we would expect to be 6 months through the fiscal year. So the second column is exactly 50% of the first column. So if all of our revenues came in on a regular basis, 12 payments throughout the year, we would expect to be at 50% of that revenue. And that is $15.86 million. The third column represents where we actually are as of December 31st. So we're a little bit ahead of the curve in collecting our expected general fund revenue this year. We're at $18 million as of December 31st. Even though our sales tax payments have come in a little bit lower than we've expected, some of our other revenue streams are front-loaded. So like our auto taxes, we would only expect to be at 50%. We're actually at 100% of auto tax revenues already. And our property taxes are also front-loaded, and so we've earned like 80% of our property tax revenues. In terms of expenses, we budgeted $32.1 million in expense for fiscal year 21. Half of that would be $16,100,000. We're at $15.9 million. So we are right at about 50% of our expected expenses for fiscal year 21. You might notice that the budgeted revenue column, the first column, and the budgeted expense column, so the fourth column, are not equal and that the expenses are a little bit more than the revenues. The reason for this is if we don't expect to generate enough revenues to cover all of our expenses for the year, we have to pull out of our unassigned cash. And so this is cash that we have generated throughout all the previous fiscal years that is not assigned to a specific project, and it's not assigned to our operating reserves. So it's cash that is available to use to balance the budget for that year. So in fiscal year 21, we actually budgeted $458,000 of unassigned cash. Now we'll move into the 1% fund. The main revenue sources in the 1% fund are, of course, sales and use tax. We also have motor fuel tax and grants. Motor fuel tax, when the state increased the gas tax that you pay at the pump, they increased that a few years ago and they said, okay, cities, we will increase this revenue or increase this tax, but when we give that revenue back to you, you have to use it to fix the roads. And so the city of Gillette puts that additional revenue into the 1% fund, and we use it specifically for our preventative street maintenance projects. So that is designated for that purpose. Moving into the 1% major expenses, we do a survey every 4 years for the 1% expenses, and per that survey, we prioritize which projects we're going to do. And so according to that survey, the top type of project every year is always street construction and enhancements. And so we do street enhancements, we do annual preventative maintenance system projects. Another type of project high on that survey are sanitary sewer main replacements and water mains. And then we also do drainage projects. Some other 1% expenses, our entire fire department contribution comes out of the 1% fund. We fund social service agencies every year. We also do beautification projects, sidewalk and pathway repairs, and park development and improvements. Looking at the financial picture of the 1% fund as of December 31st, we budgeted $16.6 million in 1% revenues. So halfway through the year, we would expect to receive $8.3 million. We've actually only earned $7.5 million, so we're a little bit behind on our 1% revenues. The expenses that we budgeted were $22.3 million, so 50% would be $11.1, but we've actually spent $13.1. Now, the reason that the expenses specifically are a little out of whack is because we have such a short construction season that we have to do as much as we can those first few months while the weather is still decent. And so we spend a lot of money in the first part of the year, and then throughout the winter months when there isn't a lot of construction going on, then we get the revenue coming in to cover those costs. You will probably also notice that the budgeted revenues are significantly below the budgeted expenses. So we budget 1% differently than we do the general fund. General fund, we budget based on expected revenues. 1% we budget based on cash on hand. So about 5 years ago, we changed the methodology for how we were going to do that budgeting. We look at our cash and investment balance as of April 1st of every year. Whatever we have in the bank on April 1st is what we use to budget the following year's projects. And then whatever comes in for revenue over that next year, we set aside to use for the following year. So the money that we're earning right now will be going to fiscal 22's projects. April 1st of 2020, we looked at the balance that we had in the bank, and we said we have $22.3 million in the bank, and then we built our 1% expense budget off of that. So we have to then budget an unassigned cash portion to cover those costs. So we have $5.6 million in unassigned cash that we budgeted for additional revenue. So those are our governmental funds, and so now we'll move into each individual enterprise fund. So our first enterprise fund is solid waste. The main revenue stream within the solid waste fund is charges for services. So every time they come and dump your trash can, you pay a charge for that, you pay for that service. And so that is the main revenue source in the solid waste fund. We also have some recycling revenue and then some interest on the investments. The major expenses in the solid waste fund are, of course, the personnel. They have vehicle maintenance, replacement, and then fuel is a big one for them. Internal services, so they pay for the general fund to provide HR services and accounting services, and you will actually see internal services on each of the enterprise funds. So because an enterprise fund is supposed to function as a standalone business, if it was a standalone business, it would have an HR person, it would have a finance person, it would have a CEO. But because they're part of the overall organization, the general fund provides those services for them, and then each enterprise fund pays for their portion of those services. So that's what internal services are. And then the major cost for them is, of course, tipping fees. So every time they take a truck out to dump it at the landfill, we have to pay tipping fees on that load. And then rollout containers when they blow across the prairie with the Wyoming wind. Looking at a snapshot of where solid waste was for their financial picture as of December 31st, we budgeted revenue of $3.1 million. We would expect to earn as of 6 months through the year, 1.57, and we're actually at 1.588. And so they are right where they should be in terms of generating revenue as of 6 months through the year. We budgeted for expense $3,133,000. And so at 50% of the year, we would expect to spend 1.566. And we've actually spent 1.4 million. This is more than likely because tipping fees have not been as great as we would expect them to be. And so if people are throwing away paper instead of glass bottles, we pay by the ton. And so, depending on what that makeup is how much we pay. The next enterprise fund is the water fund, and their main revenue source is also charges for services. They have some plan investment fees, and so whenever a new customer wants to hook into our water system, they have to pay to hook into the system, and so that's called a plant investment fee. And then they have some interest on investments. The major expenses in the water fund are personnel costs and, again, internal services paying for the administrative functions. They have repair and maintenance of their infrastructure. They also have IDBs, which are interdepartmental utilities. And so each of our enterprise funds, if they use a service from a different enterprise fund, they have to pay for that. So the water fund has to have electricity going to its wells, and so we have to pay for the electricity that the city generates through the power fund. They have to pay for their portion of the property and liability insurance. And then, of course, if they have new water meters that they have to install. And then they also have some operating capital. The water fund's financial picture as of December 31st, we budgeted to earn $7.6 million in revenue. And so halfway through the year, we would expect $3.8 million, and we're actually at $4.8. And we had a hot, dry summer last summer, and so that goes to the increase in those revenues. For expenses, we budgeted right at $8 million for expense, so $4 million would be our expectation at 50% through the year, and we're right at $3.9 million. So we are right about where we would expect to be. And again, we had to budget an application of unassigned cash of about $400,000. Moving into the power fund. The power fund, of course, charges for electricity, and so that is their main source of revenue. Their charges for their services. They also have an interfund operating transfer in from the 1% fund. They have some interest on their investments, and then the power fund gets what's called a BAB subsidy. So BAB stands for Build America Bonds. As an incentive to take out those bonds, the federal government is paying a portion of the debt service. So the city gets about $1 million a year from the federal government to go towards the payment of those bonds. Some of the expenses in the power fund, personnel costs and internal services, they also have infrastructure that they have to repair and maintain in their substations and distribution lines. One of their major costs is their purchased power, and so we have to purchase the cost of electricity from the power plant. And then we have the YGen 3 and CT2 operating costs. They have some capital construction, and then of course they have debt service in the power fund. The power fund's financial picture as of December 31st, their budgeted revenues were $35.5 million. So we would expect 17.76 million, and we're at 17.4, so we're right where we would expect to be. Their expenses are 34.4 million, 50% is 17.2, and we're actually at 15.1, and that is just because the cost of power is cheaper than what we budgeted right now. Moving into the last enterprise fund that we'll look at, and it's the sewer fund. Their main source of revenue is, again, charges for services. They also have septage sales and compost sales, and then they have some interest on their investments. Their major expenses in the sewer fund are personnel costs, internal services, repair and maintenance of their infrastructure and equipment, which would be lift stations, manholes, the different sewer lines. They have to pay for water and electricity. A major cost for them is the chemicals. They use quite a bit of chemicals in their day-to-day operations. And then they have operating capital, and they also have debt service in the wastewater fund. For their financial picture as of December 31st, we budgeted $6.6 million in revenue. We would expect 3.3. We're at 3.1, so we're pretty close to where we need to be. Expenses, they budgeted 6.7. We had so about 3.4 million halfway through the year, and we're at 4.1. And they have a couple expenses that are heavy loaded on the front side. So their $1 million debt service payment happens in August. So it happens at the beginning of the fiscal year. So that has already shown up in their expenses. And then they're doing design work at the plant for their major project that is coming up. And that's about $900,000 that is hit with no offsetting grant or loan revenue to cover that yet. Something that's not reflected in these numbers that we just took out just for this presentation, we budgeted $20 million of incoming loan proceed revenue and $20 million in additional expense for the project that is going to, the improvement project that's going to go on at the plant. But we took those numbers out for purposes of this presentation. A very brief look at our internal service funds. The main revenue sources for the internal service funds are internal transfers, basically. So our health fund premiums that come into our health fund, those premiums come from all of the users of the health fund, so each individual department. And then we also have interfund transfers for the liability fund, the liability and property insurance fund. So each department pays their respective portion of those costs. The major expenses in the internal service funds are the vehicle maintenance and repair, and then also vehicle replacement, medical and prescription costs, and then the property and liability insurance premiums and claims. So looking at some important concepts for governmental accounting, and then also for the City of Gillette, is governmental accounting's primary emphasis is to measure and report on management's stewardship and accountability for funds. So it's basically to look at the money that's coming into the City of Gillette and make sure that we're doing what we're supposed to be doing with it. There is no profit motive. Governments do not make a profit. User rates in the enterprise funds are set in a manner to recover the costs of that fund. And we'll look at the pro forma meeting in a couple weeks to go over what each of those rates is. But they don't make a profit. We have to present a balanced budget annually. It's the law in all of our funds. We also can't spend more than what we budgeted. Now, of course, there are unknown expenditures that come up every single year, and so we have the tool of using a budget amendment in order to cover those unknown expenses, but we have to adjust our budget in order to add expense to our budget. Revenues and expenses are compartmentalized. So general fund revenues are not used in enterprise funds, and enterprise funds revenues are not used in the general fund. All expenses and revenues are recorded in the department and division that earned the revenue and incurred the expense. and each fund is budgeted for separately. So each fund individually has to be a balanced budget. Another point that we talked about earlier is that the 1% fund is budgeted with cash on hand. So we look as of a certain point in time, and whatever cash we have in the bank at that time, that's what we use to build the next year's budget. We also use the 1% fund to offset the enterprise fund's costs of replacing their infrastructure in order to keep those user rates low. So we use that money for sewer main replacements, water main replacements, and the Power Funds 69 kV line in order to keep the rates low in the enterprise funds, because if the enterprise funds had to pay for the costs of those replacements, the rates would have to be a lot higher. And then the last point is that internal service funds are used for internal customers only, that the customers within the City of Gillette pay their proportionate share of the costs of those funds.
Thank you for watching this episode of Eye On Gillette. We hope that you found it informative. Our next episode will be an interview with Ted Hyde from Ulta Planning and Design. They are the consultant that the city has retained to assist with the Gillette Pathways Master Plan. Look for it on Facebook and YouTube.